This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashir. Thanks for joining us at XM.com. The risk rally spurred on by optimism of a Russia-Ukraine ceasefire is looking a little shaky after both Washington and Moscow played down the significance of the apparent progress in the latest round of negotiations. Russian forces have reportedly intensified their attacks on Ukrainian cities, confirming the West's skepticism about the pledge to scale down military operations around Kiev. The Kremlin has also been dismissive of the claims of progress. However, although the mood has dampened a little, investors remain cautiously upbeat about the prospect of some kind of a ceasefire. Neither side has abandoned the negotiating table, and the talks will continue on Friday via a video call, so this is sustaining the optimism for the time being. U.S. stock futures were edging higher on Thursday, suggesting Wall Street will resume its rally after the S&P 500's four-day winning streak came to an end yesterday. Stocks in Europe were mixed, but Asian equities were mostly in the red. The Ukraine crisis has made the ECB's policy dilemma a lot worse as the central bank ponders how soon to begin raising interest rates to fight surging inflation. The euro has made impressive gains on the back of the slight de-escalation in tensions between Ukraine and Russia, and geopolitical headlines look set to remain in the driving seat for the time being. The Japanese yen was mixed, firming against most majors, but was notably weaker versus the US dollar. The Bank of Japan was active in the bond market again today, attempting to keep the 10-year yield from spiking above the 0.25% cap. The dollar was recouping some of yesterday's losses, even as Treasury yields continued to retreat from the highs reached at the start of the week. The commodity-linked currencies were underperforming on Thursday as oil prices took another dive, falling by more than 5%. The Biden administration is considering whether or not to release more of its strategic crude reserves to stem the jump in oil prices. Reports suggest the U.S. could release up to 1 million barrels of oil a day, as OPEC has so far declined White House demands to boost supply. OPEC is holding its monthly meeting with its non-OPEC allies today, but the cartel is almost certain to maintain the existing production plan. This was today's Daily Market Comment. Thanks for joining us at XM.com.